My objective with this video is to teach you 3 very important parts of trading. Number 1 is an effective strategy that utilizes moving averages and candlestick patterns to point out high likelihood zones in the market for trading opportunities. Number 2 is to teach you exactly how to place live trades with a real account on the TradingView platform. And number 3 is to teach you a very underutilized tactic for controlling your emotions and for mastering your trading mindset. So if that sounds good, go ahead and click that. But before we go and subscribe, if you are new, and I'll be right back after the intro and disclaimer. Welcome back! And just in case you're brand new, my name is Sam. Let's get started by talking about this effective strategy that utilizes moving averages as well as candlestick patterns and a bit of structure in order to point out accurate trading opportunities. So on the screen, you can see that we have a moving average here. That's that red line. You see this moving average specifically is the 20 EMA. Now when it comes to moving averages that I use for things like areas of value, I use the 20 EMA, the 50 EMA, and the 200 EMA. Those are the only 3 moving averages that I use for support and resistance, what I also refer to as areas of value. Now this is a trade I'm about to place live with you here, but I want to do this analysis and breakdown first before we actually place the trade. So let's take a look at what we have. We have prices currently doing what? But we were in an uptrend, and hopefully at this point you can see this reversal. This reversal is what I call a 123 move. We have price making an impulsive move down followed by a smaller pullback / lower high from our previous high. We then have another lower low with this impulsive move. This signifies the start of a bearish trend or a possible bearish trend, which is what we're trying to capture. So with this strategy, we're looking for this move, this 123 reversal, then waiting for price to pull back to a specific moving average, in this case the 20 EMA. And we have a couple of other things that we're going to be looking for as well. But the first thing we need to see is this 123 reversal move, or reversal in trend now to the bearish direction. Next we have this pullback. Now coming up to this moving average, do you see anything else that we could utilize to add accuracy to a possible trading opportunity in this situation? Hopefully you were able to look left and say yes, we have a decent level of structure looking left. We have this level of support that's been tested multiple times as resistance and support. And what I like to do with this specific strategy is add a level of support like this or a level of resistance, a level of structure in general like this that's been tested multiple times. With a specific moving average, again I use the 20/50 or 200. So in this case we had this level of structure lining up very closely with our 20 EMA. Now if you've been a part of the channel, you've heard me talk about CEST a million times. CSC, ESD is an acronym I use to create trading opportunities and trading strategies. Everything we've discussed so far would fall under the category of conditions. Now what do we need after conditions in order to have a rules-based way of trading? We're going to need a reason for entry, then your stops and your targets. That's what the whole acronym stands for. So at this point we have our conditions met of price creating this lower low reversal move. We have a pullback to the moving average, which is the 20 EMA, which aligns with a major level of structure looking left. So what can we look for possible entries? Well, some of my favorites to use are candlestick patterns. So if I zoom in here, you'll see why I'm about to place this trade. I'm literally about to go short. Here again, I want to do that live with you so I can show you how to place trades on a live account in the TradingView platform. But here if we zoom in a little closer, we actually have a really nice candlestick pattern. We have a rejection right here. This, otherwise known as a shooting star candle, comes up. This is buyers trying to take control throughout this entire wig. But when price hits this area of structure combined with our 20 EMA, what happens? Sellers say no. Sellers create this long lake. Now that's good, but waiting for some added confirmation can make things a little more accurate. So what happens next? Next, we get a large comparison to the previous candle, at least in terms of the body. A large red candle. So this is what I need to place a trade. At this point, the conditions we've already discussed have been met. My entry is right here with our long wick candle, followed by a red candle in the zone. Remember, that has to happen after the conditions are met. So with this being the case, this is how I would like to place this trade. I would go ahead and enter there, which I'm about to enter. I have to take it off market replay mode and actually enter the trade, which I'll do again in just a second. I'm going to check out the ATR, which is what I use to play stop losses. The ATR of this candle is right up here. It's right at 45 pips right now. By the way, with the TR, you discount the last number, so that is 0.45 or 45 bits, 45 pips on the ATR, which means I'm going to go about 40 to 45 pips above the high of this week to have a safe stop loss. So that's going to be about 91 pips, which gets me above my major level. I'm going to look for about a 1.4 to 1 reward risk ratio, which is the reward to risk that I personally like to use a lot of the time once price gets to this little level here. I will probably move my stop loss to break even. 558. If we do push down, we may go straight up and hit my stop loss. I have no idea. But this trade is giving me a positive expectancy because of all the things we've already discussed. All the conditions coming together along with these candlestick patterns gives me a positive expectancy. So with that being the case, let's go ahead and remove market replay so I can place this trade live with you. And if you haven't noticed, what did we accomplish by going through this entire trading process? We accomplished CEST, a completely rules-based way of trading and rules-based strategy. So let's go take out a live trade here on the Euro-Yen, getting out of market replay mode. Oh no, a big green candle. Now for a lot of new or struggling traders, you may think that I'm sitting here going, no, I'm definitely not going to hear this trade now because this big green candle. Quite the opposite. What this big green candle tells me is I'm getting a better entry. I can have a smaller stop loss and a larger reward to risk ratio. All of my analysis, even though there's a green candle right here that's pushing higher, all of my analysis is still valid. I still have my major level of structure. Lining up with the 20 EMA, I still have the candlestick patterns that existed before this one, so I don't have any reason to expect this trade not to win at this moment. So because of that, I'm going to go ahead and set up a new position tool with a stop loss at the same spot and a target at the same spot. And now I'm getting closer to a 2.4 to 1 reward to risk ratio based on the same trade just because I'm getting in one candle later at a higher price. So let's go ahead and place this trade so that you guys can see it done live. The first thing you have to do is set up a brokerage with TradingView. If you do not see your brokerage whenever you open up the trading panel, that just means that your brokerage is not able to connect with TradingView. If that's the case, you'll find a new brokerage. Or just place the trade in your own trading platform whenever you want to trade. But for me, my brokerage is a Wanda, so go ahead and connect to that. To avoid thousands of people seeing my account information, I did fast forward through that. But as you can see down here, we are on a live account. This is one of our smaller accounts. But I am in fact going to go ahead and place this trade. So first off, before I place a trade, I always use this position tool that TradingView has. And just in case you don't know where that is, I haven't favored it, but you can just go right here. It's under whatever this is called prediction and measurement tools. And once you click that, you can find short position and long position. I favorite them, but I have that position tool on the chart every single time I place a trade, and the reason is it makes placing a trade so easy. At this point, all I have to do is right-click the position tool after putting the entry where I want it, putting the stop loss where I want it, and putting the target where I want it. After I have that done, all I have to do is right-click, click create limit order, and then go to market order at the point or limit whatever you want to place, right market limit or stop. I'm going to be placing a market order. I'm going to be using about a 2% risk here. And this is literally the entire process of placing a trade. At this point, all I have to do is click sell. I'm involved in the trade. That is the entire process of placing a trade in TradingView and exactly how you do it. And in my opinion, if you have a broker that connects to TradingView, this is by far the easiest way to place trades, and especially if you use a certain percent of your account as your risk management plan. So now with that out of the way, we'll see how this trade plays out. It's currently Friday, so if you want to check this chart, maybe it's Saturday, Sunday, or next week. By the time you see this or years down the road, who knows, but feel free to check it. I obviously have no idea if it's going to win or lose, and I'm okay. That either way, because of my good risk management that I have set up of a 2% loss on this specific trade. With that out of the way though, let's go take a look at a bullish version of this strategy. Then we'll talk about that underutilized way to master your trading mindset. Here we are on the pound Swiss. We're going to take a look at a bullish version of this strategy. By the way, if I sound nasally and my voice cracks, it's only because I'm currently battling strep throat. I honestly think the only way I'm going to get rid of it is if you smash that like button for me. Totally joking. You don't have to do that. Hopefully the antibiotics will work, but if you've made it this far in the video, you might as well. So let's take a look at a bullish version of this. What do we have happening here on the pound Swiss? Now I will admit, in this case we do not quite have a 123 move, but what we do have is a large impulsive move breaking above the previous level of resistance. This will suffice for a trade for me. If we get that, we get a large impulsive move breaking above a level of resistance. I count that as a possible reversal. What do I mean by that? What I mean by that is at this point, if we get a pullback that touches our 20 EMA and coincides with this previous level of structure that's been tested multiple times, then I can look for possible entry opportunities. So let's see what price does after pointing out our structure level. So this would be the area that I would be interested in a trading opportunity from based on the conditions of this strategy. So let's see what price does. Okay, we're inside the zone and we're pushing off of the 20 EMA, and we do have a good candlestick pattern here. But again, I'd like to see more confirmation than this, so I would be waiting on a green candle after a long wicked candle in order to get involved. Next up we have another red candle that is also still a hammer candle. still a long wick to the bottom side showing buying pressure, but not a green candle. I need to see a green candle for confirmation. And there we go! Finally, we get a green candle there. So the way this position would look is something like this. I would take the HR of this candle, which is currently 58 pips, so let's go 58, add that to the bottom of this week, which means we have about 113 pips for the stop loss. And again, I'd like to go for about a 1.4 to 1 reward to risk ratio. So at this point, if we're looking at this at CEST, we have our conditions met of moving average area of value combined with our area of structure. We have our entry met with a long wicked candle, followed by buying pressure for a bullish trade. We have our stop in place and our target in place. This is where I would actually place the trade. If I click play, you'll see that price did eventually push up high enough to hit our target. Anything I tell you about trading psychology will be completely useless unless you have mastered what I'm about to tell you, if you have not mastered the basics of whatever market you're trading in. If you have not mastered either technical analysis or fundamental analysis, or both, whatever you decide to trade based on, and if you have not mastered creating a strategy that's rules-based enough for you to stick to and proven to be profitable over time along with mastered risk management, then I can speak for hours about trading psychology and it will help you. 0. Because until you've mastered those 4 things, nothing I say about trading psychology is going to help you in any way, shape, or form. So if you are currently at the position where you don't have a mastery level understanding of the basics of the market you're trading in, or you haven't mastered technical/fundamental analysis or both, and you don't have a strategy that's rules-based that you're sticking to, and you don't have a risk management plan, then you need to work on all of that and then come back to learning about trading psychology. Feel free to stick around through this lesson, but understand that nothing about trading psychology is going to be applicable until you master those other 4 parts of your trading. After you have those things mastered, trading psychology and discipline can still be a bit difficult, and this is where this little hack comes into play. So many traders see themselves as bad or inadequate based on the results of a single trade or a single week. You may go out and lose 2 or 3 trades in a row and think of yourself as inadequate as a trader. Then give yourself as a loser in the markets, for lack of better terms, and think about this whenever you last join the signal service if you ever have. What if they sent you 2 signals in a row and they were both losing trades? Have you ever gotten that and been like, oh, this guy absolutely sucks at trading? Obviously, he doesn't win. He just lost 2 trades in a row. If you have, don't worry, you're not alone. When I was starting out, that's what I thought too. When in reality, that person may be a good trader, but they just had 2 losses in a row. They may not be a good trader. I know some signal services are a bit sketchy, but the point here is no matter how skilled you become, no one will ever know what the market's going to do at a specific moment. No matter how much skill you acquire at trading, you're not going to know what price is going to do on one specific trade. As I learned from Mark Douglas, our ability to be profitable relies on our ability to understand and accept that we are trading based on a statistic advantage that plays out over a large sample size of trades. So although we can't predict exactly what the market is going to do with 100% accuracy right now, we can make a very high likelihood assumption based on a large sample size of trades and a predictable pattern that is proven to be profitable over time, otherwise known as a strategy. So to make this very clear, as a professional trader, I am not trading based on what I know the market's going to do next. I am trading based on a statistic advantage that plays out over a large number of traits. You will be trading when you are profitable, not based on what you know the market will do. No matter how skilled you are, you will never know what the market will do at that exact moment. But what you will be trading based on when you become profitable is a statistic advantage that plays out over a large sample size. And for me, that sample size is about 100 trades. So, what I do is I pay attention to my trading based on a sample size of 100 trades. I don't look at it going, oh, I lost 2 trades today. Oh, I had 4 losses in a row. I didn't make money this week, or oh, I didn't make money this month. I look at it as over the past 100 trades. Have I had an edge over the market in backtesting? That's how I backtest in real trading. That's how I trade, and that's how I'm able to have a good trading mindset throughout drawdowns and even throughout losing streaks. Is by accepting and knowing that I'm trading not based on me knowing what the market's going to do. No, I don't have a crystal ball. My name's not Merlin. There's no way for me to know exactly what price is going to do, and there's no way for anyone to. We are trading based on a statistic advantage that plays out over a long period of time. And by the way, I am currently looking for 500 new or struggling traders to mentor and help accomplish their trading goals throughout the remainder of this year. So if you're looking for some more advanced training and you want access to a full university-style course that will walk you through the entire process of building your own trading plan using strategies and techniques that have been profitable for me over the years, along with email analysis, which is alerts, I send you 2 to 5 times a week, the Pro Trader Report every Monday, which are the areas of structure I'm paying attention to for trades and priority coaching support, which means you have access to me anytime you have questions. It's a full mentorship program. Then go ahead and click that top link in the description or go to www.thetradingchannel.com, and if that's not something you're interested in, no worries at all. Just make sure you're subscribed here. Make sure you click that like button. If you made it to the end, go ahead and comment below. I'll wish you the best of luck on all your future trades, and I'll see you in the next video. Talk soon!